Hello, hi guys. This is CA Balakrishna from lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. So, in the today's class, we will be quickly discussing revision test paper of May 2026 examination with respect to CA Final Audit. So without any waste of time, let us start the discussion. So if you see in the first two pages of RTP, you will find the amendments that are relevant for May 26 examination. I have already made a separate video on these amendments and I have given in the playlist. You can watch the amendments from the playlist. Now coming to the RTP, let us first of all start with MCQs. So there is a integrated case scenario that has been given. Let's quickly go through it. So we'll do one thing. We will come from the questions. We will see the questions, and if we are able to solve the question directly, we will solve it. Otherwise, we will see the relevant content from the case study. Okay? Yes. So first MCQ, which is based on the case study. Considering the facts given in the scenario, which of the following statements correctly describes auditor's reporting responsibility in relation to revaluation of a plant and machinery under CARO 2020? Basically, with respect to revaluation of a plant and machinery, clause 1 of CARO 2020 deals with that aspect. So what has happened with respect to plant and machinery? Let's see in the case study. We will directly go to the point which deals about revaluation. I guess this one. See, during the year on 30th December 2024, company revalued its class of plant and machinery, which included leased CNC plant recognized as a right of use asset. So, a ROU asset has been revalued. Okay, under Ind AS 160. The revaluation was carried out by a registered valuer, absolutely fine, using depreciated replacement cost method. Consequently, the aggregate net carrying value of class increased from 4 crores to 4.45 crores. So how much is the percentage of increase? Representing 11.25% increase. That means the increase in the value of complete class is more than 10%. If the valuation increases more than 10%, that has to be reported in the CARO clause 1, right? Yes. Now you might confuse, like here the asset that we are discussing here is a ROU asset. Whether revaluation of ROU asset should also be disclosed in the CARO clause 1, the answer is yes. Any type of asset due to revaluation, if change occurs to more than 10%, that needs to be disclosed, and you need to see that change class wise, not individual asset wise. So here the increase is more than 10%, it is 11.25%. The surplus of 0.45 crore was recognized in other comprehensive income. Okay, whether you recognize it in other comprehensive income, that is OCI, or you recognize it in profit and loss, in both the situation it needs to be disclosed in CARO since the change is more than 10%. Understanding? Yes. So if you see the options, what are the options they have given? First option, this is, since the revaluation relates only to CNC plant forming part of larger class of plant and machinery, and surplus is recognized in OCI rather than profit and loss, auditor not required to report in CARO. Is that the correct option? Answer is no. Whether profit is recognized in profit and loss or OCI, that is irrelevant. CARO clause 1 doesn't speak about it. It says if change is more than 10%, you have to recognize, you have to report it in CARO, right? It is basically clause 1 subclause D. What option B says? Auditor is required to report under clause 3, clause 1 subclause D. Basically here clause 3 means you don't confuse that it is Coro clause 3. No, the complete clauses that we discuss in Coro, they are given in clause 3, right? That 3 they have mentioned. This is the actual clause number. Okay, so under clause 1 subclause D, you need to report it of the Coro 2020 because revaluation has resulted in an increase of more than 10% in the aggregate net carrying value of class of asset irrespective of number of assets revalued or accounting treatment of the surplus. So irrespective of how you have treated surplus, irrespective of how many assets have been revalued, if change is more than 10%, you have to report it. So option B is the correct option, right? Yes. Moving to second MCQ. In the context of reporting under clause 2 subclause B of Companies Auditors Report 2020, which of the following statement is most appropriate in the given scenario? Basically, clause 2 it deals with inventory, right? Let us first of all see in the case scenario what is the discussion that has been made with respect to clause 2. I guess this one. See, DMC Bank sanctioned working capital cash credit facility of 5.5 crore. Basically, as per clause 2 subclause B, if clause 2 subclause A, if any working capital loan of more than 5 crore has been sanctioned, that gets reported, right? In June 2024, secured by hypothecation of current assets, which was later reduced to 4.5 crore. So later on it was reduced to 4.5 crore. It has come below 5 crore. Now since it has come below 5 crore as on the date of balance sheet, should it not be reported in Coro? The answer is you have to check this 5 crores at any point of time during the year, not as on the balance sheet date. So you need not consider the fact that it has been reduced to 4.5 crore because at a particular point of time it is more than 5 crore. Okay. Next, the outstanding balance as at 31st March 2025 was 3.9 crore. So on 31st March 2025, that means at the end of the financial year, the outstanding amount in that borrowing cash credit facility is 3.9 crore, which is less than 5 crore. But at any point of time, it is more than 5 crore, right? 5.5 crore. So you should not consider this 3.9 crore for the purpose of reporting. Okay, you have to consider this 5.5 crore. And the sanction limit was reduced to 4.8 crore. Quarterly stock statement and drawing power calculations submitted to bank were found to be in quantitative agreement with books of accounts. Management appropriately disclosed this position in their financial statements. Now tell me whether this scenario should it be reported in Coro or not. The answer is you have to report in Coro clause 2 subclause B, right? So what are the options that they have given? Let us see. Reporting is not required because outstanding balance as at the end of the year is below 5 crore. Is reporting not required since the outstanding balance as on 31st March is below 5 crore? The answer is no. You should not check the outstanding balance as on 31st March. You have to check whether amount has crossed 5 crore at any point of time during the year. So option A is not correct. Since company is unlisted and stock statement agree quantitatively with books, reporting under Coro is not mandatory. No, this point is also not correct because this kind of discussion it is not made in Coro, irrespective of whether company is listed or unlisted. The reporting in clause 2 is required if amount crosses 5 crore at any point of time. That point you need to find. Option C, as working capital limit is in excess of 5 crore were sanctioned at any time during the year against security of current assets, the auditor is required to report whether quarterly returns or statements filed with the bank are in agreement with the books of accounts. Yes, Option C is the correct option, right? Yes. Next, what would be the auditor's responsibility for the reporting of unsecured loan as discussed in the scenario? First of all, let us see what is the discussion with respect to unsecured loan. Yeah, this deals with unsecured loan. On 1st January 2025, Sinwar Limited, that means the company, granted unsecured loan of 2 crore to its joint venture Mekong Infra Private Limited, carrying an interest rate of 10% per annum and repayable in quarterly installments commencing on 31st January 2025. As at the year end, since the first installment became due, no amount had been repaid and 2.05 crore, including accrued interest, was outstanding. No impairment provision was recognized, though joint venture reported marginal profits but negative operating cash flows. Now tell me whether this loan which the company has given, should it be recognized, should it be reported in Coro or not? See, basically, as per clause 3 of Coro, any loans given by the company to its subsidiaries, associates, joint ventures need to be reported, right? What is the amount of loan that has been granted and how much amount is outstanding as on the balance sheet date? These two things needs to be reported. So, since the loan of 2 crores has been given to one of the joint venture, this point it needs to be reported in clause 3 of Coro, right? Let us see the options. The auditor is required to report the loan as the loan will be considered as NPA under prudential norms. This is not a banking company, so this option is irrelevant. Next, auditor must report the aggregate amount of loans granted during the year and the balance outstanding at the end of the year. However, reporting of default will not be required. See, Coro clause 3 doesn't speak about default in the receipt of amount. Clause 9 speaks about default in repayment of loan. If the company has taken the loan and if it has not repaid that loan amount, you will report it in clause 9. But clause 3 doesn't speak about repayment. Here in clause 3, company given the loan and that joint venture to whom loan has been given, it has not repaid. So non-repayment point need not be reported in clause 3. Just amount of loan given and outstanding balance. Only these 2 points needs to be reported. Got it? Yes, sir. So option B is the correct option. Next, fourth MCQ. What will be the Bhishma and Co.'s? Basically, Bhishma and Co. is the chartered accountancy firm which has been appointed as auditor in the case scenario. So, what will be the Bhishma and Co.'s responsibility for reporting under BRSR in the current scenario? So, basically, if you see, Bhishma and Co. has been appointed as financial statements auditor in the case scenario. Bhishma and Co. has not been given any responsibility to provide assurance on BRSR, business responsibility sustainability reporting. For providing assurance on BRSR, company have appointed some other person. Okay, they have not given that responsibility to Bhishma and Co., to the statutory auditors. Now, in this situation, the responsibility of a statutory auditor in the case scenario is just to provide assurance on financial statements. Company is also preparing BRSR report. So what is the responsibility of a statutory auditor with respect to this BRSR reporting? What is their responsibility? Tell me. See, basically, if statutory auditor has also been given responsibility to provide assurance on BRSR. First of all, assurance on business responsibility and sustainability reporting, assurance on this BRSR need not be provided by only chartered accountant. Any professional can be appointed to provide assurance on this BRSR. And even the statutory auditor of the company, he can also be given the responsibility to provide assurance on BRSR. It is completely the management's call to take whom to appoint to provide assurance on BRSR. In the current scenario, statutory auditor is not appointed to provide assurance on BRSR. Even though statutory auditor has not been appointed to provide assurance on BRSR, there is certain responsibility on statutory auditor as per SA 720. As per SA 720, other information. Basically, in the annual report that the company gives to the stakeholders, the audited financial statements will be there, audit report will be there, right? And apart from these two, there will be various other information that will be there in the annual report. So whatever the information is present in the annual report, apart from these two, will be considered as other information as per SA 720, right? Now in the annual report, this BRSR will also be given by the company. So this BRSR also comes under other information. So as per SA 720, there is a responsibility on the auditor to read the other information in the annual report and to ensure that there is no inconsistency between this other information and the audited financial statements. So here there is a responsibility on the statutory auditor, even though he has not been appointed to provide assurance on BRSR. What is his responsibility? To read that BRSR and to ensure that there is no inconsistency between the BRSR and the financial statements. Got it? Yes. So we need to find out where is that option. Option A says BRSR reporting is on ESG related matters and same does not fall under scope of financial audit. Yes, it doesn't fall under scope of financial audit. It is correct only. And hence, Auditor Bhishman Co. should not verify any disclosure of BRSR reporting. No, just because of the fact that it doesn't come under financial audit, it doesn't mean that you should not read BRSR. There is a responsibility as per SA 720 to read BRSR. So option A is wrong. Next, Auditor Bhishman Co. is required to express reasonable assurance opinion on BRSR report as it is part of auditor's responsibility under Companies Act 2013. No, Companies Act 2013 doesn't place any responsibility on the statutory auditor to provide assurance on BRSR report. Okay, company can appoint anyone to provide assurance on BRSR. Okay, there is no specific fixed responsibility on statutory auditor. So option B is also wrong. Next, although sustainability disclosures under BRSR are outside the primary financial statements, Auditor Bhishman Co. is required under SA 720 to read such other information and consider whether it is materially inconsistent with the financial statements or the auditor's knowledge obtained during the audit. As per SA 720, auditor is having responsibility with respect to other information, and BRSR is also other information only because it will be included in the annual report. So auditor needs to read BRSR and ensure there is no inconsistency between BRSR and the financial statements. So option C is the correct option. Next, fifth MCQ. With respect to use of Microsoft Power BI, basically Microsoft Power BI is a analytical software, analytical tool, which will be used for analysis of various data. Okay, for identifying high value sales transactions recorded during non-business hours. Which of the following represents most appropriate audit approach? Basically, in the case scenario, auditors have used this Microsoft Power BI tool for analysis of certain information. Okay. Now, after analyzing that information, what the auditors have to do with respect to that, there are certain options. We need to select the best option. Okay. So option number A, auditor may rely entirely on the dashboard outputs generated through Power BI as it provides sufficient and appropriate audit evidence. See, whatever the tools that you use for analysis of data, You cannot completely rely on it. Apart from using the tool, you should also perform some additional audit procedures. Okay, you should not completely rely on that tool itself. So option A is wrong. Next, analytics results may be considered sufficient audit evidence and no further audit procedure will be necessary. Answer is no. Certain further audit procedures also you should perform. Certain further substantive procedures also you should perform. Auditors should use analytical output to identify unusual trends and potential risk areas. Okay, yes. And thereafter, perform additional substantive procedures, verify supporting shipping documents, and evaluate relevant IT general controls and user access logs. Yes, option C is the correct option. So there ends the case scenario based MCQs. Now we'll start with independent MCQs. So MCQ number 6. Sunny and Co has been appointed as central statutory auditor of Money Bank private sector bank, a private sector bank. Okay, registered with RBI for financial year 2024-25. So this MCQ is related to bank audit. Now, while reviewing the computation of demand and time liabilities, engagement partner observed the following treatment of certain items. So basically, if you remember, while calculation of demand and time liabilities, certain items should be included, certain items should be excluded. So they have given certain 5 items, and they have also given inclusion, exclusion, inclusion, and you have to find out whether they have been properly included and excluded, or have they mentioned wrong in this column. Okay, let us start. Net credit balance of branch adjustment accounts. So if there is any net credit balance in the branch adjustment account as on 31st March, that will be added to net demand and time liabilities. Why it will be added? Because RBI wants all the banks to reconcile their branch adjustment accounts. There should not be any outstanding balance in the branch adjustment accounts. All the transactions should be cleared. So to ensure banks will properly reconcile their branch adjustment accounts, RBI told that if there is any credit balance in your branch adjustment account, we will add it to net demand and time liabilities. So credit balance in branch demand and time liability, credit balance in branch adjustment account should be included in the demand and time liability calculation. What they have told? Yes, inclusion. So that is correct only. Next, amount received from ECGC. ECGC is Export Credit Guarantee Corporation by invoking the guarantee. So if any exports have been made, and for that export, if any money has not been given by the foreign importer, ECGC will give that money. Okay, now ECGC has given certain money to the bank, which has to be given by the bank to the relevant exporter. Now this money which ECGC has given to the bank is a liability on the bank, because bank has to pay it to exporter, right? Relevant exporter. Now this amount, it will be paid by the bank to the exporter within 1 or 2 days. It will not be kept by the bank itself for a long time. So the RBI told that even though this is a liability to you, you don't include it in the demand and time liability calculation. So you have to exclude this. What they are saying? Exclusion. So yes, second one is also correct. Next, amounts received in INR for disposal of import bills shown under sundry deposits. So when any Indian customer, any Indian importer imports goods to India, he needs to pay the money to the exporter in dollars. But Indian person, he will have only rupees. So what he will do? He will give Indian rupees to the bank. Bank has taken Indian rupees. Bank will convert Indian rupees to foreign currency and it will pay the foreign currency to the foreign person. Now it will take some 1 or 2 days after collecting Indian rupees from the Indian importer. It will take time to convert the money and make the payment. So in that 1 or 2 days, money will lie with the bank only. So it is a liability for the bank, but it is lying with the bank for a 1 or 2 days only. So RBI told that since it will lie with you only 1 or 2 days, you don't include it in the demand and time liability calculation. So it should be excluded. What they have mentioned, they mentioned it should be included. So this is wrong. It should be excluded. Next, unaccounted inward remittances received on behalf of customers. So if any inward remittances have been received on behalf of customers, so Indian customer has to receive certain money from the foreign country. So inward remittance received to the bank. If it has been accounted, that means properly credited to the customer's account, then that is fine. If it remains unaccounted, then bank RBI says that if these inward remittances are unaccounted, you include them in the demand and time liability calculation, because RBI wanted banks to account these inward remittances as early as possible. Understanding? So to ensure that banks don't delay accounting for these inward remittances, it told the banks that if you delay accounting for these inward remittances, you have to include them in the demand and time liability calculation. So it should be included. So yes, inclusion, correct. Next, margins held and kept in sundry deposits for the funded facility. What is this margins held for funded facility? See, first of all, funded facility means a loan that has been given is known as a funded facility. So you have given, let's say bank given 100 crore loan. Now it will keep certain margin, like it will say the borrower, you deposit some 10 crores with me for the 100 crore loan that we are giving to you. So this is a kind of margin that the bank has kept. Now these margins which the bank has kept, it is a liability for the bank, right? But RBI told that you don't include them in the demand and time liability calculation, since you have kept this as a margin for the loan that you have given. So in this loan it gets adjusted. So you don't include it, you exclude this 10 crore, that is the margins which have been kept for the funded facility. So what they have given, include they have given, so it should be excluded. So third point and fifth point wrongly they have given. So what they are saying, identify the aforementioned serial numbers of the items that have been incorrectly included in or excluded from the computation of demand and time liabilities. What are they? 3 and 5, right? Option D. Next, 7th MCQ. An audit team was scheduled to conduct year-end physical verification of inventory at a client's warehouse. Okay. However, due to unexpected travel restrictions and safety guidelines, auditors are unable to visit the warehouse in person. To avoid delay in completing the audit, client proposed the use of augmented reality. What is meant by augmented reality? For the existing real world, you will make certain additions, is known as augmented reality, right? Enable devices to enable the auditor to observe the inventory remotely. Now, which of the following options correctly explain how augmented reality works? Option A says it allows users to view real world environment with added elements. Yes, this is the correct definition of augmented reality. Option A. It is a step forward and replaces real world. This is virtual reality. With the help of this, user can explore simulated world. Simulated world is also virtual reality VR. So option A is the correct option. Next, 8th MCQ. Gamma and Associates was appointed as statutory auditor of Sara Limited, an unlisted company engaged in paper manufacturing. During the audit, following observations were made. First observation: major flood during the year damaged one of the company's warehouse, resulting in losses. Management has adequately disclosed the same in financial statements and considered the loss to be not material. See, management has disclosed this in the financial statements. Okay. Next, observation 2. Due to flood, certain transaction records were completely destroyed and no duplicate records were maintained. The impact of this matter is material but not pervasive. Material but not pervasive, and no audit evidence is available. That means here you will give qualified opinion, right? And this matter you can give in emphasis of matter paragraph, UAM paragraph, since it is already properly disclosed in the financial statements. You can emphasize this in the emphasis of matter paragraph. So what they are asking, under which heading Gamma and Associates should report observation 1? Observation 1 will be under emphasis of matter paragraph and observation 2 will be under qualified opinion. So option A says emphasis of matter and qualified opinion. Yes, option A is the correct option. Next, moving to the descriptive questions. Question number 1. Sorry, question number 9. Mrs. KRM Associates Chartered Accountants is a statutory auditor of Velocity Engineering and Projects Limited, a listed company engaged in execution of large scale infrastructure projects under engineering, procurement and construction, that is EPC. Here you need to observe that this company is a listed company across India. Now, the firm has an experienced partner designated as engagement quality control reviewer for the listed entity audits. Okay, they are having an experienced partner who will be acting as engagement quality control reviewer. Now, during the audit for the year ended 31st March 2025, engagement team noticed the following matters. Revenue of 1250 crore recognized under long term EPC contract using percentage of completion method based on cost to cost input method under Ind AS 115. Significant variation claims and escalation clauses were included in transaction price based on management's assessment of high probability of recovery. So this is one of the point that has been observed by the engagement team. Okay. Next, impairment testing of investments in step down foreign subsidiary executing overseas EPC contracts where cash flow projections were based on aggressive assumptions about future contract awards. Okay, this is also one of the observations that has been made. See, these are just observations that were made. You need not understand about these observations in order to answer this question. See, next, disagreement between senior member of the audit team and the engagement partner regarding inclusion of variation claims as part of transaction price, with senior member recommending external technician consultation. Technical consultation. So there is differences of opinion between whom? Between senior member of audit team and the engagement partner. Since there is a disagreement between these two people, the matter has been referred to external expert, external technical consultation. So proper consultation has been made in this situation, that is fine. The firm did not have internal infrastructure specialists. However, external consultation was obtained and the matter was resolved without formal documentation of consultation process. This point you need to observe. So till here everything is correct. Difference of opinion occurred. They have referred to external expert, matter was resolved, but documentation, formal documentation of the same has not been maintained. Here they have not complied with the requirements of SQC1, because SQC1 says that whenever any consultation takes place, the aspects related to that consultation and how the matter has been resolved, these things needs to be properly documented, but they have not documented it. So this is one of the point that you can mention in your answer. Next, engagement quality control reviewer was informed about the audit. Okay, EQC reviewer was informed about the audit, but review was conducted only at the summary level. So engagement quality control reviewer has not conducted a detailed review. It seems he has done only summary level review, which is not proper. So engagement quality control review should be done detailedly. Next, detailed evaluation of significant judgments relating to revenue recognition and impairment was not performed. It seems again this is also not in compliance with SQC1. Whatever the significant judgments that the audit team has taken, those judgments should be reviewed. But in the situation, the EQC reviewer has not reviewed them. Next, audit report was signed before completion of formal EQC or documentation. Can the audit report be signed before EQC review? The answer is no. Audit report has to be signed only after EQC review and its documentation has been completed. So again, this is also not in compliance with SQC1. Next, differences of opinion, if any, were not formally documented or resolved. So all these things are the issues which are against the SQC1. All these points you can mention in your answer. Okay, you can refer, like this is related to under engagement quality control review, this has happened. And with respect to consultation in difficult and contentious matters, consultation has to be taken. In the current situation, consultation of external expert has been made, but the documentation has not been made properly. That you need to mention. Okay. Next, the working papers contain general review notes, but no detailed documentation evidencing depth of consultation or completion of objective EQCR procedures prior to issuance of audit report. Again, with respect to documentation related to consultation not maintained properly. Now, you are required to examine compliance with requirements relating to engagement performance. Now, in order to ensure utmost quality in the engagement performance, what has to be done? You have to provide briefing to your engagement team, right? And you should also maintain proper documentation of each and everything that has been done. But in our situation, documentation has not been maintained. So there is the engagement performance element number 4 is not done properly. Next, consultation. With respect to consultation, what happened? They have consulted the external expert, that is fine, but documentation again they have not maintained. That point you need to mention under consultation. Next, engagement quality control review. See, engagement quality control review is mandatory for listed entities, and engagement quality control reviewer must be a proper must be a experienced person who is having who is eligible to get appointed as auditor of the company. Such a person should be appointed as engagement quality control reviewer. In our question, experienced person only appointed. But the problem is the audit report has been signed before completion of engagement quality control review. That point you need to mention under engagement quality control review. 3 points under these 3 scenarios, these 3 sections. Got it? Yes. Next, we'll once see how they have presented the answer. So if you observe, first they have told about first point, engagement performance. Under engagement performance, to achieve engagement performance, what has to be done? Briefing of engagement team, processes to comply with engagement standard, and appropriate documentation. But in our situation, documentation, adequate documentation is not done properly. Next, second one is with respect to consultation. So consultation should take place for difficult contentious matters. He should be proper person. But here what happened? In the given case, disagreement existed, though matter got resolved, no documentation for consultation process was maintained. That you need to mention. And engagement quality control review with respect to EQCR, all the point you need to mention, like it is mandatory for listed entities, EQCR must be experienced person, right? All these points you need to mention. And you need to say that in the present case, although firm had a EQC reviewer, review was not adequately performed, significant judgments were not objectively evaluated in depth, and audit report was issued before completion of proper EQC review. So engagement quality control review was not done properly, that you need to conclude. Okay, so you need to present the answer in 3 parts. Next, question number 10. CA Kanishka is auditor of a company engaged in poultry farming and egg production. The company has performed very well since its incorporation in 2015. Its sales had grown and the company had expanded its operation from its home state North India to eastern regions of country. However, over the past 2 years, company's financial performance has deteriorated significantly due to impact of pandemic and 3 consecutive outbreaks of bird flu. Okay. Consequently, company's turnover sharply fall from 80 crores to 18 crores. If you observe all these points, they are events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. Correct or not? As per SA 570. Still, if you see, the management now wants to start with new batches of birds. The earlier working capital facilities of company granted by company have also been restructured to support the business. So the credit facilities have been restructured, it seems, to support the business. She was informed that repayments of restructured working capital term loans are to begin from the ensuing year. So from the upcoming year, the restructured loan repayment will start. No fresh credit facilities have been granted by the bank. Bank did not give any fresh credit facilities. Bank is unwilling to give credit facilities. Again, event, financial event, right? The company also plans longer credits from animal feed suppliers. Next, the company plans to take additional measures to prevent the safety of livestock, including aggressive vaccination, preventive health checkup, and more frequent visits of veterinary staff. Okay. Further, the company is facing allegations from nearby villages regarding environmental pollution. Now, the management has prepared cash flow forecast for her examination. Discuss the approach to be adopted by her in examining the going concern assumption, keeping in view above with a specific reference to cash flow forecast. So they are asking how you will verify the cash flow forecast and compare it with respect to the case scenario that has been given. So whenever cash flow forecast has been prepared, you will verify 2 things with respect to cash flow forecast. For preparing cash flow forecast, there will be underlying data. Whether that underlying data is reliable or not, that is the first thing that you will see. Next, for preparation of a cash flow forecast, you have to make various assumptions, whether those assumptions are reasonable or not. These are the 2 things that you will check. Okay. Now you need to compare these things to the question. So while verifying cash flow forecast, what you have to see is, here they are saying the, if you observe this point, the repayment of a restructured working capital term loan ought to begin from ensuing year. So from the upcoming year, repayment of working capital should happen. So whether in the cash flow forecast that repayment has been presented properly or not, that needs to be checked. Next, company also plans longer credits from animal feed suppliers. That means from the creditors, company is expecting longer credit period. Now company is in bad situation. In such a bad situation, how company is expecting to receive longer credit duration from the creditors? How the company will manage the creditors? How company will convince the creditors to give longer credit period? So this assumption that the management has taken regarding getting a longer credit period from the creditors, is it a reasonable assumption or not? That needs to be checked by the auditor. Next, company is planning to take additional measures like preventive health check, frequent visits from the veterinary staff, and vaccination. For doing all these things, amount has to be spent. So whether in the cash flow forecast, whether cash outflow for these expenditures has been shown or not, that can be checked by the auditor, right? Next, further, company is facing allegations from nearby villagers regarding environmental pollution. So to deal with this environmental pollution, how company is spending the amount, like what care company is taking to ensure that pollution doesn't happen. In order to prevent the pollution, company has to spend some money and ensure safeguards, right? So whether in the cash flow forecast, outflow with respect to this cause has been mentioned or not, these things the auditor needs to check. Got it? Yes sir, very simple. Next, question number 11. ABC Limited is a listed manufacturing company engaged in heavy engineering activities. During the audit of its financial statements for the year ended 31st March 2025, statutory auditor noted the following. What are they? Company has overstated closing inventory by 8.7 crore due to incorrect valuation of obsolete stock. So there is a overstatement of 8.75 crore, because of which profit also will be overstated. Next, company has not disclosed material pending litigation of 12 crore relating to environmental penalties, which is required to be disclosed under applicable financial reporting framework. A particular disclosure has to be made, but the disclosure is not made. Okay. Auditor has obtained sufficient appropriate audit evidence in respect of both the matters. So, audit evidence is available. However, management has refused to adjust the inventory valuation and also declined to disclose the pending litigations. Management is not willing to make the changes. Auditor has concluded that misstatement are material. So, they are material but not pervasive. So, audit evidence is available, misstatements are material but not pervasive. What opinion you will give? Qualified opinion you will give, right? So you have to frame the qualified opinion paragraph, basis for qualified opinion paragraph. In the basis for qualified opinion paragraph, you need to explain these matters, you need to elaborate on these points, and if possible you can also give this disclosure. So this disclosure has to be given in the financial statements, but the management has not given the disclosure. So now you can give this disclosure in the audit report, right, as per SA 705. So that is this particular question. Here you need to determine the type of opinion that has to be given, and you need to frame the opinion paragraph. Okay. Next, question number 12. A chartered accountant has been requested to undertake a compilation engagement for preparation of financial information of an entity. The financial information is intended to be used by group of external stakeholders, and the engagement is expected to continue on a recurring basis. It is SRS, standard on related services, right? While considering the engagement of while considering acceptance of engagement, practitioner holds a preliminary discussion with management regarding the manner in which engagement will be carried out and the nature of financial information to be prepared. In the above context, analyze the matters that practitioner should ensure are clearly understood and agreed with management before commencing the engagement. So, management has come to the chartered accountant and asked the chartered accountant to prepare financial statements. Now, before accepting this engagement of preparation of financial statement, that is compilation engagement, what aspect needs to be agreed by the chartered accountant with the management? First of all, you need to ask the management what is the purpose of this particular engagement. Okay, purpose, or you can say intended use. So if I prepare these financial statements, how you will use these financial statements? Intended use. Next, what is the applicable financial reporting framework as per which these financials has to be prepared? Next, responsibilities of practitioner. Practitioner responsibilities. See, his responsibility is to prepare the financial statement, right? Next, management's responsibility. See, practitioner, he will help the management for preparation of financial statements, but the ultimate responsibility for preparing financial statements lies with management only, and establishment of internal control is also responsibility of the management only, and maintaining accuracy in the books of accounts, that responsibility is also lies with the management only, and making judgments that are required for preparation of financial statements, even that responsibility also lies with the management, that needs to be agreed by the chart accountant with the management. Next, form and content of report that has to be issued, understanding. So these are the things that needs to be agreed with the management, getting it? Yes, before accepting the engagement. Next, question number 13. CA Amar has been approached by a company to undertake a review of its historical financial statements. So this is review. Review means standard on review engagement, SRE series, under SRE 2400. During a preliminary discussions, practitioner observes that certain key financial information may not be available. Management has imposed restrictions on the scope of work, and there are concerns regarding management's integrity and compliance with ethical requirements. These things have been observed. In the above circumstance, explain the factors affecting the acceptance and continuance of review engagement. Also state the situations in which, unless required by law or regulation, practitioner should not accept the review engagement. So management has come to the practitioner for giving a review engagement. So before accepting review engagement, what aspects you will see? If these things are there, you will not accept the review engagement. What are they? Practitioner feels that there is no proper purpose for this engagement, for this review engagement. If he feels that there is no proper purpose for this review engagement, then he will not accept the engagement. No purpose. Okay. Next, practitioner feels that if he accepts the engagement, he cannot act or he cannot comply with ethical requirements, including independence. In such a situation also, he will not accept the engagement. If practitioner came to know that required information is not available, okay, required information not available, then also he will not accept the engagement. Next, management is putting restrictions on the practitioner, okay. If management is putting restrictions on the practitioner, then also he will not accept the engagement. And finally, if practitioner has doubt about integrity of management, then also he will not accept the engagement. So these are the points you need to mention. In these 5 scenarios, practitioner will not accept the engagement if he feels that there is no problem. See, of these 5 points, 3 points already they gave in the question itself, getting it? Yes. Next, question number 14. Impressions Private Limited is an e-commerce company that has recently started using blockchain technology to record customer payments made through cryptocurrency and to execute smart contracts with suppliers. The system is connected to company's existing accounting software through application programming interface, API. Okay. Management believes that blockchain is fully secure because the transactions cannot be altered once recorded. However, auditor is concerned about issues such as loss of private keys, inability to reverse incorrect transactions, cyber attacks on network nodes, data privacy compliance, and changing legal regulations relating to cryptocurrency. What are the common risks associated with the use of blockchain technology? See, what are the common risks? First risk is, once the transaction takes place in the blockchain technology, it is irreversible. Irreversibility is first risk. Second risk is, management or the company cannot access the data in the blockchain without having a private key. So if their private key is lost, or if they forgot their private key, their data is completely lost. That is also one of the risks. Another risk is these blockchain technology, it operates through nodes. Since these nodes are present across geographical areas, there is a high chance of losing confidentiality of the data. So these are some of the risks. Next, coming to also discuss probable audit implications when an organization uses blockchain technology. See, from the audit perspective, auditor has to ensure that management is exercising proper governance over the transactions that take place through blockchain technology. So there should be proper governance. And one more thing is, this blockchain technology is there, this technology cannot or will not work independently. This technology works as an integration to the existing softwares or the existing technology. So this blockchain technology gets integrated with the existing systems through API, application programming interface. So since blockchain technology integrates with the existing software, if this technology, blockchain technology, is not coded properly, there is a risk to the existing softwares also, right? That is the second aspect in the that needs to be considered by the auditor. Next, one more thing is, with respect to this blockchain technology, laws and regulation, the regulatory landscape is not developed yet. So auditor has to ensure whether management of the company is continuously following the latest developments in the area of blockchain with respect to laws and regulation. Understanding? So whether management is updating themselves with respect to latest laws and regulations that are coming in the area of blockchain technology or not, that needs to be once checked by the auditor. So these are audit implications with respect to blockchain technology. So simple, this question it has been asked a lot of times, right? Next, question number 15. During the statutory audit of Fairbank, you are examining the cash credit account of Mrs. Bribe Traders as of 31st March 2025. Following facts are observed. Sanction limit is 4 crore. Okay. Outstanding as on 31st March is 4.1 crore. So 10 lakhs excess. It is outstanding. If the outstanding, if that excess is for more than 90 days, then that becomes out of order, right? There are no credits and it is more than the sanction limit for more than 90 days, you will treat it as out of order, right? Let us see how many days it's been. Excess over limit 10 lakhs for 15 days. Oh, it is only for 15 days, so you need not treat it as the NPA since it is only 15 days. Next, latest stock statement available. So stock statement also latest past 3 months. uh, Stock statement should not be older than 3 months, right? So as on 31st March, stock statement prepared as on 31st January 2025 is available. That means within 3 months only. Next, renewal of limit was due on 28th February 2025 and is under process. Okay. Interest is regularly serviced and no amount is overdue beyond 90 days. Fine, completely all right. Drawing power is properly calculated based on stock statement less than 3 months old. Branch manager has treated the account as a standard asset. Examine whether account requires classification of NPAs. No, this account doesn't require any classification of NPA because everything is within the limits only. The same thing you need to explain. Okay, so the stand taken by the branch manager by treating it as a standard asset is proper. That should be your conclusion. Okay, yes sir. Next. RST Limited, a public sector company engaged in power generation, has recently completed 5 years of operation. The board of directors has requested an auditor to evaluate not only the accuracy of its financial statements, so financial statement audit, along with, but also efficiency of operation, adequacy of internal controls, overall performance of the company. That means they are asking for a comprehensive audit, right? Because financial statements need to be verified, efficiency of operation, adequacy of internal controls, overall performance of the company, all this gets covered in comprehensive audit only, right? So preliminary review shows several projects experienced cost overruns compared to approved budgets. Okay, what they are asking, Identify the type of audit suitable in this scenario. Okay, the type of audit suitable is comprehensive audit. And suggest the key issues that the auditor should examine during such type of audit, considering the company's operational and financial activities. So in comprehensive audit, what are the aspects that you will check? There are basically certain 10 points that you will check, right? What are they? Firstly, capital cost. Whether overall capital cost, is it within the budgeted limit or has it crossed the budgeted limit? Next, rate of return. Whether required rate of return has been achieved or not. Next, whether operational outputs means you have thought of producing 1000 kgs of finished good. Whether have you produced 1000 kgs of finished good or not, that is nothing but operational output. So all these three are related to production output. So rate of return, operational output, and cost, capital cost. Next, you will see whether project formulation, the systems related to project formulation and implementation, are they proper or not. Next, you will check whether there is a proper system to ensure that expenditures will be done properly. And expenditures means what expenditures will be there? First expenditure is major expenditure is purchases. So whether there are proper policies being followed for purchases. Next, research and development. So whether company is having a proper research and development department. And another expenditure could be repairs and maintenance. So whether repairs and maintenance is done properly or not. And next, one more thing you will see, which is just a second, there will be lost two more points. Let me go to the answer. So are the procedures effective and economical, and is there any poor or insufficient or inefficient project planning? Yeah, project planning. Basically, this project planning, and this fourth point, project formulation and execution, D and the final one, both will be related. Point D deals with project formulation and execution. J deals with project planning. So planning, formulation, execution. Okay. So these are the things that you will check in case of comprehensive audit. Next, LED Limited, a manufacturing company, has recently implemented new ERP system for processing all financial transactions. Okay. During the audit, auditors noticed that some user IDs are being shared among employees. It is not clear whether audit trial feature has been consistently active. Access logs for audit trials and configuration changes are not routinely reviewed. Okay. Explain the purpose and importance of audit trial in a computerized accounting system. So audit trial is basically a feature in a accounting software. What this audit trial will do? Audit trial will help to trace the transactions. It will help to trace the history of the transactions, right? So the transaction that you are finding in the books of accounts, how it has occurred, who has entered the transaction, at what time the transaction has been entered, if at all any alteration has been made, who made those alterations, at what time those alterations have been made. All these things can be identified by going through audit trial logs. This is the purpose of audit trial, right? Yes, that you need to explain. And also advise the key internal controls which may be required to be implemented and operated to verify functionality of audit trial by the auditor. So with respect to this audit trial, what controls should be there? Basically, there should be 5 controls with respect to audit trial. What are those 5 controls? First, there should be controls to ensure that audit trial feature is operating effectively throughout the period. That is, it should be ensured that audit trial feature is not deactivated, to ensure that there should be controls. Next, there should be controls wherein user IDs should be allocated to all the employees, and those user IDs should not be shared among employees. That is another control that should be there. Next, if at all any changes to the configuration of audit trail has to be made. See, configuration of audit trail means basic features of audit trail, like audit trail records who made the entry, at what time entry has been made, at what date entry has been made. Now someone wanted to change the configuration. That means they wanted to change in the audit trail feature capturing of who entered the entry. So a person wanted to delete the feature of audit trail capturing the person's name who is entering the entry. So to make such major changes to the audit trail configuration, proper controls should be there. That is, not everyone in the organization should be having access to make changes to the configuration of audit trail. That is another control that should be there. Next, there should be control wherein audited trail logs should be properly backed up on a daily basis. Next, access to the audited trail log should not be given to everyone. It should be restricted. These are the 5 controls that should be there with respect to audit trail. Got it? Yes, sir. Next, question number 18. PMO Limited, a manufacturing company, has received complaints of overstocking of raw material and irregular payments to suppliers. Management has appointed SPY and Co to investigate these issues and submit a report. Preliminary reviews show that inventory records are incomplete. Some purchase approvals were bypassed and supporting documents for payments are missing. Now, state the key steps investigators should follow to conduct this investigation. So, see, you cannot give a standardized procedure for investigation based on the circumstances. The steps in investigation will vary, but normally generally there will be 5 steps. Okay, what are those 5 steps? First one is you need to define scope and objective of investigation. Once scope and objective has been defined, next you need to develop a investigation program, nothing but a plan. After that, you need to perform procedures and gather evidence. Once you have gathered the evidence, you need to analyze the evidence and find the findings. And once the findings have been found, those findings should be reported. These are the 5 steps in any type of investigation, right? Next. So that should be answer for point A. Next, explain the important considerations investigator must keep in mind while preparing the investigation report. So while preparing investigation report, what points should be kept in mind? First thing is, irrelevant information should not be given in the report. Only required information should be kept in the investigation report. Okay. Next, of course, this report should be in a written format. Okay. And next, this report should clearly mention your opinion. Your findings should be mentioned clearly. And if there are any restrictions with respect to circulation of this report, that needs to be clearly mentioned. And objective and scope of this investigation should also be clearly mentioned in the investigation report. And if you have taken any assumptions for this investigation, those assumptions should also be clearly mentioned in this particular investigation report. These are points that should be considered by the auditor while framing the investigation report. And also, while drafting the investigation report, whatever the terminologies that you use in the report, those terminologies should be carefully selected, because the terminologies should not be in such a way that the users might misunderstand the report. Okay, these are the points that needs to be kept in mind while preparing the investigation report. Next, question number 19. Elec Limited, is a consumer-oriented company engaged in manufacture and sale of household electrical appliances. The company promotes its products widely through online platforms and advertisements. However, some advertisements overstate the benefits of products. Advertisement. See, when you see about advertisement, which principle it is? In principle number 9, you will see about advertisement. What is principle number 9? Providing value to the consumer in a responsible manner, right? In the 9 principles of NGRBC, the ninth principle is providing value to the customers or consumers in a responsible manner. In that only you will see about advertisement, grievance redressal, right? And do not clearly disclose information about environmental impact or safe disposal. Further, customer complaints relating to data privacy breaches and defective products remain unresolved due to absence of structured grievance redressal mechanism. The company has also discontinued services to certain low income regions, stating that it is not commercially profitable. With reference to 9 principles of BRSR, analyze the above situation in relation to responsibility of ELEC Limited towards consumer. Firstly, which principle it is? Principle number 9. Principle number 9 deals with providing value to the customers in a responsible manner. So, what are the core elements of these 9 principles? The first core element is, if your product is having any negative impacts, adverse effects, those adverse effects should be properly communicated to your customers, and you should also take efforts for reducing that negative impacts or adverse effects. These are the first 2 points. Next, there should be a freedom for the customers to select the products, whatever the product they wanted, they should be free to select, right? There should be proper competition in the market, and you should also ensure privacy of customers data. Okay. And next, one more core element of nine principles is, whatever the advertisements that you make about your products, misinformation should not be given in that advertisements. Next, there should be proper grievance redressal mechanism available, right? And one more thing is, you need to properly communicate to your customers about responsible usage of the product, and you should also communicate to customers about how to dispose this product after it has been used. Understanding these are the core elements of principle number 9. All these core elements you need to write in this particular answer. Okay. Yes sir. Next, Mr. Ajit, a practicing chartered accountant, started a coaching institute for CA aspirants in Delhi. He displayed large hoardings across the city. See, you should not display hoardings across the city. Just in front of your educational institute, you can put the hoarding, but not across the city. Okay, so since he has put hoardings across the city, it will be treated as advertisement, right? And those hoardings are stating, coaching by CA Ajit, also undertaking audit, tax audit, and attestation assignment, contact for professional services. Can you do like that? If you put hoardings like that, it will be treated as advertisement and you will be guilty of professional misconduct under Schedule 1, Part 1, Clause 6, right? He also circulated pamphlets in nearby commercial areas inviting business to appoint him as statutory auditor. Again, doing advertisement. Under clause 6, he will be deemed to be guilty of professional misconduct. Next. Further, CA Ajit responded to tender floated by a listed company for statutory audit work. See, first of all, can you respond to the tenders? The answer is, if the tender is related to a work which is exclusively reserved for the chartered accountant, you should not respond. If the tender is related to the work that is open for everyone, you can respond. Next, if the tender is if the work is exclusively reserved for chartered accountant, for those types of tenders also you can respond in exceptional situation. What is exception? That a tender should contain minimum fees that should be quoted. If tender contains the minimum fees that should be quoted by the chartered accountant, in such a scenario, chartered accountant can respond to the tender even if that work is exclusively reserved for the chartered accountant. Right? This is what clause 6 says. Now let's see what happened. Further, CA Ajit responded to tender floated by listed company for statutory audit work. See, statutory audit work is exclusively reserved for chartered accountants. If a work is exclusively reserved for the chartered accountant and in that area a tender is given, can you respond? The general rule is you cannot respond. But exception, if there is minimum fees prescribed, you can respond. Let us see whether minimum fees is prescribed. The tender document did not prescribe any minimum fees. Tender document does not have any minimum fees, and that work is exclusively reserved for chartered accountant, and you have responded, you will be deemed to be guilty of professional misconduct, again under same clause 6, schedule 1 part 1 clause 6. Furthermore, audit and attestation services were exclusively reserved for the chartered accountant. Examine whether CA Ajit is guilty of professional misconduct under the Chartered Accountants Act 1949 due reasons. Yes, he is guilty of professional misconduct under both the situations. Both situations will fall under Schedule 1, Part 1, Clause 6. Right? Yes. So this is complete discussion of May 2026 RTP for CA Final Audit. I'll be winding up this class as of now. We'll meet you in the next class. Until then, take care. Bye bye. See you.